Welcome to today's Explainer. We're diving straight into a truly historic move in the market. The KOSPI just pulled off an absolutely massive 8.18% rebound. Forget your typical slow market recoveries. We're talking about a sudden, violent shift in market geometry that instantly wiped out days of intense panic selling.
Things are moving incredibly fast right now, and there is a fascinating hidden narrative buried just beneath these numbers. So let's break down exactly what drove this unprecedented anomaly, and more importantly, what it means for the days ahead. To really put this into perspective, an 8.18% surge isn't just a good day at the office. It's the largest single-day gain in KOSPI history. In literally one trading session, the market aggressively erased a deep, compounded layer of shock and panic. Now, the equities market wasn't acting in a vacuum. Right alongside this massive stock surge, we saw the Korean won acting remarkably strong, holding very firm at 1,516.
But okay, here is your reality check. Despite this huge stock market party, the Korean 10-year yield held tight at 4.273%. What does that tell us? It brilliantly illustrates that structural interest rate constraints are still fully intact. The macroeconomic ceiling, it hasn't vanished at all. Let's rewind a bit to see how this pressure cooker was actually built. We had a severe, multi-layered shock. It started with unexpectedly hot U.S. employment data on June 5th, followed closely by escalating geopolitical hostilities, and it all culminated in a devastating KOSPI circuit breaker on June 8th. But you know what happens during a panic? The market completely ignores good news. Amidst all that chaos, investors completely overlooked a massive structural catalyst, a multi-year HBM supply agreement between SK Hynix and NVIDIA's Jensen Huang. The sheer terror of the geopolitical shock totally suppressed it. But then, the entire setup pivoted on a dime. When ceasefire calls hit the wires and hostilities were suspended during the U.S. session, the short-term panic just evaporated. The VIX, which is basically the market's ultimate fear gauge, collapsed instantly, dropping over 12%. The recovery that followed in the U.S. was highly specific. Tech names with long-term horizons like Intel and Micron, which had been dumped the hardest, recovered the farthest. On the flip side, shorter duration platform names like Apple and Alphabet, they actually remained pinned down by those persistent interest rate constraints we talked about. And we saw the exact same sequence play out over in Korea. As that geopolitical dark cloud finally lifted, long-duration and semiconductor equipment names just exploded higher. SK Hynix surged nearly 16%, while equipment makers like PSK and TES absolutely rocketed up by over 22%. The real momentum here was driven by domestic institutions. They stepped in with incredible force, deploying 2.5 trillion won to absorb basically all available supply. They drove 774 individual stocks higher, essentially painting the entire tape green. But here is the multi-trillion won question. Who is on the other side of that trade happily selling to them? Foreign investors. They use these wildly elevated prices to execute their largest single stock exit, dumping 1.36 trillion won of SK Hynix straight into the arms of the rally. Now, this is a crucial takeaway for us. Foreign capital didn't actually flee Korea. It just systematically repositioned itself. They cashed out at peak equity prices and quietly shuffled that massive pile of capital straight into Korean 3-year bond futures. And the sheer volume of this rotation was staggering. Foreigners net bought 13,600 3-year bond contracts. That kind of aggressive buying immediately drove bond yields down by 9.2 basis points. Think about this. It marks their 22nd consecutive day of net equity selling. What we're really witnessing is a massive, hidden rotation underneath the headline rally, driven entirely by the fact that the market is still pricing in a stubborn 72% probability of another rate hike. Looking elsewhere in the market, simple supply chain logic started taking over. A major U.S. data center agreement triggered an immediate spillover right into Korean optical communications. Sungho Electronics, for instance, caught a massive wave of foreign inflows and jumped over 13%. Now, pay really close attention to this next dynamic. We are seeing a brutal execution of what's known as selling into strength. Literally, the absolute second a market catalyst concludes, investors are cashing out. Right now, the market has zero patience for expired narratives.
Let me give you a perfect example. The very moment NVIDIA's Jensen Huang departed Korea, the AI positioning cycle snapped shut. With that main catalyst gone, we saw steep and immediate liquidations across Naver, LG Electronics, and Doosan Robotics. The story ended, and the capital exited immediately. No hesitations.
We observed that exact same sell the news behavior with Hyundai. The official listing of their new robotics ETF crystallized the theme and instantly closed out a massive 30-day cycle of pre-positioning in the auto sector. Investors realized they had no further catalyst to hold out for, so they violently dumped their positions right into the broader market rally. This sent heavily positioned names like Hyundai Automotive dropping over 8%, and it dragged Mobis right down into the red with it. Kia, however, was a totally different story. Because it carried significantly less of that physical AI pre-positioning, it didn't suffer from the same speculative overhang. Instead, it managed to capture 105 billion won in active foreign inflows, finishing the day up a very healthy 8.52%. If you would like to receive news on the closing of Asian stock markets before the New York stock market opens, please subscribe. Because as we watch domestic buyers chase these historic KOSPI headlines, while foreign capital quietly rotates billions into the safety of bonds, the real question you have to ask yourself is this: are you trading the visible rally, or are you preparing for the hidden rotation? Thanks for joining us on this explainer. We'll see you next time.